institutions look at money itself. It's a true honor to welcome to Bitcoin MENA the Executive Chairman of Strategy Inc., Michael Saylor.
Thank you.
Let's begin. So, Michael, for the first time in modern history, we're watching a parallel monetary system where, outside the control of any superpower that we see, do you believe Bitcoin represents the first peaceful transfer of monetary influence from the West to the East? And could the UAE become the first nation to strategically harness that shift instead of resisting it?
I think Bitcoin represents the first digital economic protocol that's clearly open. And because it's an open protocol, every nation and every bank and every company and every individual and every family can decide to what extent they choose to embrace it economically. And so, you know, William Gibson has a very famous phrase. He said, the future's already with us. It's just not evenly distributed. And I think for the first time in human history, Bitcoin represents the ability to tightly bind economic energy to the individual, but it also represents the ability to tightly bind economic energy to a corporation or a government using information. And so the entities that are going to benefit are the ones that embrace digital transformation. And what can be said here is, I came here to UAE about 15 years ago for the first time. And when I came, everyone here bragged very loudly. They said, we're going to lead in digital government. We're going to lead in mobile government. And so digital healthcare, digital government, digital finance, digital transformation. And so if you actually embrace digital, then when the world's money becomes digital, capital becomes digital, finance becomes digital, and currency becomes digital, it's pretty natural that you would be a leader. So I think that the region is benefiting disproportionately because they recognize that the digital version of everything is better than the physical version of everything. And having said all that, though, you can embrace the thing about say digital photos is it doesn't cost a lot of money to embrace digital photos. So a billionaire could say, I understand digital photos, I have an iPhone. But on the other hand, when you get to digital capital, if you're a billionaire and you say, I understand digital money, the question is, do you buy $1,000 of it, $1 million of it, $100 million of it, or $1 billion of it? And so the billionaire that really understands digital money buys $1 billion of it. And I would say, again, it's not evenly distributed. There are some people that get it and buy a little bit, and some get it and buy a lot, and some say they get it and they want to talk about it. And then the same is true at the government level, the bank level, the investor level. So I think there's extraordinary enthusiasm here. It's happening, but it's going to dynamically evolve, and everybody's making their own decisions.
I would say in the UAE we built regulatory clarity before mass adoption. And in the US, mass adoption came before regulatory clarity. Which model wins long term, and who do you think is which nation learned from the other one?
Ironically, the UAE was in the lead in digital assets 18 months ago, and the US was disengaging. They were actually shutting down the entire digital assets industry. And then there was an inflection point where we had the red sweep in November, and the US went from being fairly regressive to being progressive. And now I would say it's pretty clear that the two countries in the world that are the leaders in digital assets are the UAE and the USA. And I would say that other nations in Asia and Europe and Africa and South America are far behind. And so clearly at this point, most of the innovation is going to come either out of the UAE or out of the USA. And I think the two nations are really in competition there. There are certain things in the USA that are moving aggressively, especially the integration of traditional finance with digital assets. That's being led by companies like BlackRock that have done IBIT, and then my company that has created digital credit. But then in the UAE, you've got a lot of innovation in digital tokens and the like, and you have companies like Binance that are really leading in pure crypto. So I think that's a very constructive competition, and the more important point is there's 100 countries that are either following or disengaged that are going to have to try to catch up, and it'll be interesting to see. It'll be interesting to see what happens in Europe, Switzerland, Singapore, Australia, Canada. But right now, I don't really think any of them are anywhere close to catching up with either the UAE or the US.
An interesting question, and I think coming into Abu Dhabi, everybody wanted to hear this answer from you. MSCI just labeled Bitcoin exposed company as a specialist high risk, and businesses that essentially punishing firms that adopt the Bitcoin treasury system. Do you believe that MSCI is trying to protect the old monetary system, or they're simply too slow to understand the new one?
I wouldn't ascribe to malice what you could ascribe just to ignorance. And and in this particular case, I don't think they understand digital assets or digital products or digital services. And so there's a bit of fear, a bit of uncertainty, a bit of a doubt, and a bit of ignorance involved. And by the way, it's not unique. The struggle is real. When we first bought Bitcoin, our insurance company dropped us. The insurance business wouldn't insure any Bitcoin or crypto company, and then the banks wouldn't bank, and then the accounting profession wouldn't allow you to generate profits from being engaged in the business, and there were politicians that were hostile, and the credit rating agencies wouldn't rate your credit, and even the banking regulators don't acknowledge Bitcoin as worth anything. So I think you have a lot of structures in the traditional finance market, whether it's insurance or credit or index funds or banks. They all start from a position of unawareness, and then they're a bit fearful and skeptical. And then we've educated them, and we educated the bankers, and now they're embracing Bitcoin. We've educated hedge funds, and now they're buying Bitcoin. We've educated the accountants, and now they've adopted fair value accounting. We've educated the politicians, and now the head of the SEC, the head of the CFTC, the head of the Treasury, the President, and the Vice President of the United States all embrace Bitcoin. We will educate the index funds, and we'll make the point that insurance companies have assets, and if they don't have assets, you can't have insurance. And banks have assets, and if you don't have assets, you can't have consumer credit. And airlines have assets, and if you don't have assets, you don't have airplanes, you can't fly. And Disney World has assets, and if there are no assets at Disney World, there's no theme parks. Cruise lines have assets, the cruise ships. And mobile phone companies have spectrum, and if they didn't have spectrum, there would be no mobile phones. And digital companies need digital assets to provide digital services. And if you take the position that companies that have a lot of assets shouldn't be in the index, you would remove all the banks, all the insurance companies, all the airlines, all the mobile phone companies. All the oil and gas companies would be removed because they have assets. If you can't have oil reserves, you can't have an oil company. So I think that, if you understood the business, you would see that this is irrational and almost borderline silly. But I don't ascribe malice. I just think they don't understand that Bitcoin is digital capital, and you can't create digital credit or digital products or digital services without digital assets. And if you want to digitally transform the finance markets, you're going to need digital assets to do it, in the same way that you need real-world assets or financial assets to provide any real-world product or any financial product. And so I think we'll win them over the near to midterm. I don't know when, but I don't think it matters, because at the end of the day, nothing can stop an idea whose time has come. And the idea is digital capital, which is 3 times better than the S&P and 15 times better than sovereign debt as capital. And the idea is digital credit, which is 2 to 4 times better than conventional credit. And the capital investors are going to buy the capital, and the credit investors are going to buy the credit. And the equity index doesn't matter over the long term. They might make a difference over a week or 2 weeks if you're a short-term trader. But it wasn't, the S&P index did not create Tesla, and they did not create Starlink, and they did not create self-driving cars, they did not create AI, and they did not create the iPhone, and they did not create digital capital, they don't create digital credit. So they're a lagging indicator. They will understand, and if MSCI doesn't get it, they'll just lose out to NASDAQ or S&P. And if they all don't get it, then the index investors will just shift their money out of the indexes and they'll move it to active managers. Because if I give you an idea, if I tell you I can generate unlimited clean energy from this bottle of water, this is your fusion reactor, and you're going to be rich and powerful forever, it doesn't matter what the MSCI's opinion is, and it doesn't matter what the accountants say. It doesn't even matter what the politicians say, because one nation's going to decide we want infinite free clean energy, and when they do it, they're going to become the most powerful nation on earth, and then they will set the standards.
So you guys have your answer? Anybody who's doubting strategy or any doubt in the market or within that space, I would say, Mr. Michael said and answered that perfectly. Strategy today now owns roughly more than 3% of all Bitcoin in circulation. Some argue that this level of ownership introduces a potential concentration risk to the network. Is there a point where you believe Strategy's share could become too large to the extent that it might distort price dynamics, create a systematic risk, or even challenge Bitcoin's perceptions of decentralization?
I don't think so, for a couple of reasons. First of all, we have somewhere in the range of 50 million beneficiaries. So if you look at the people that hold our equity and then the institutions that back them, they're like pension funds, insurance companies, nation states, sovereign wealth funds. 15% of all of our securities are held in Charles Schwab retail accounts. So we have a massive distribution of shareholders and beneficiaries, and we have delivered Bitcoin interest to 50 million people, and that will double to 100 million people over the next few years. The second point I'd make is that 85% of all Bitcoin is held in dark pools, and no one even knows who owns it. So in essence, since we have joined the network, we've driven the price of Bitcoin up by $1.8 trillion, and that $1.8 trillion has been transferred to 85% of it to people we've never heard of that live in China or Russia or Africa or South America. And so the network is in essence decentralizing, because lots of money and influence is spreading everywhere else in the world. It's very natural that corporations are going to accumulate Bitcoin on behalf of beneficiaries. Just like BlackRock probably represents, another 50 million investors. Coinbase represents 100 million investors or more. And so the corporations are just on-ramps for families, retailers, and retail institutions to get access. If we are lucky enough if we ever get to 5% of the network, Bitcoin's going to be at least $1 million a coin. And at that point, something like 18 to 20 trillion dollars of money has going to will be transferred to the 85% that don't hold any of our corporate interest or BlackRock or anybody else. And if we ever get to 7.5% of the network, Bitcoin will be 10 million a coin, and probably 70 to 75% of all the Bitcoin will be held by non-corporate entities, and that means $150 trillion will go to non-corporate holders. We will represent the interest of 250 million investors, and people that you don't know, that you can't trace, will have $150 trillion, and they can do whatever they want with it. So I don't think we represent a threat to the network. We really represent a motor, and we're powering the network up. We're driving the price of Bitcoin up from 10,000 to 100,000 to 1 million to 10 million. And we're doing it by creating common equity that large institutional investors can buy, and then preferred equity and credit instruments. And the equity and the credit instruments we create allow large pools of capital to invest in the crypto economy. And if we didn't exist, none of that money would ever flow into Bitcoin. And then Bitcoin would probably be trading at $10,000 a coin right now. And there would be no corporate influence, and 90% of the Bitcoin would be held by non-corporate holders instead of 85, but the network would be 200 billion, not 2 trillion. And if you want the network to become 20 trillion or 200 trillion, you're going to have to allow corporations, money managers like BlackRock, corporations like ours, and banks like Fab or Emirates Bank or JP Morgan. You have to allow them to enter the network if you want to be 200 trillion. And if you want the network to be 20 billion, then you can dismiss all corporate interest, and then you won't have 20% of the Bitcoin held by corporations, but you will only have 1 penny or 1/10 of a penny instead of $1. And so the trade-off is, do you want the world to benefit, and do you want to get rich, and do you want to let them also get rich? Or do you want to stay poor and keep them from being involved? And that's like mutually assured destruction.
A question to the regulators, and I know briefly we spoke up there about regulations. The UAE is designing and implementing the regulatory future for digital assets, while, to be transparent, the US still debates about Bitcoin as a classification and what classification should it be. From your perspective, what would a Bitcoin native regulatory framework look like, one that unlocks prosperity for both nations?
Well, I think that if you think of Bitcoin as digital capital, we already have regulatory clarity on Bitcoin as the commodity in the US and pretty much everywhere in the world, except for people that just hate property rights. I think that the evolving areas of regulation aren't really around capital or equity or even the credit instruments. All of our credit instruments like STRC, they're all just securities. I think the dynamic gray zone is the tokenization of currency, the tokenization of securities, the tokenization of money markets, the tokenization of brand tokens, and then the trading and the custody of all of those. And I think that, I mean, the great idea would be, can I create a stable coin powered by Bitcoin that pays 8%? And in order to do that, you need to be able to tokenize create a money coin, a digital money market, and tokenize it and trade it on crypto networks. We're waiting for clarity with regard to digital securities, digital tokens, and we've got a little bit of stable coins, but the Stablecoin Act doesn't let you pay yield on a stable coin, and you can't create a stable coin with Bitcoin right now. So I think the Clarity Act, the market structure bill, and that will come next year, will provide 30 or 40% insight, but it won't clarify this. I think if you wanted the ideal digital assets framework for the world, like what's best for the world, you would define digital tokens as a token issued with an issuer that is not a security, like a ticket, a membership, a brand, maybe Joe Rogan coin, and you would be able to log into Joe Rogan's website, and Joe Rogan could sell 10 million Joe Rogan coins over the weekend for $40 in 4 hours, and the law would be if Joe Rogan commits fraud, the issuer is civilly or criminally liable for the token. If you did that, you'd have 40 million tokens issued, and you would raise trillions of dollars of capital. And then the second asset class would be digital securities. You would let an issuer, like any bank or BlackRock or Vanguard, tokenize a security like Apple stock or MSTR or STRC. And then the issuer would be civilly and criminally liable for fraud, but the digital token could trade, the digital security could trade anywhere in the world at the speed of light. And then the third asset would be digital currencies. And a digital currency would be tokenized currency equivalents in US dollars or yen or euros. And the issuer would be civilly and criminally liable for fraud. You would have to show that you have the reserves to back the tokens. If you print twice as many tokens as you have reserves, that's fraud. And then you would let them move at the speed of light. And then the last would be digital commodities. And the definition of a commodity would be an asset without an issuer. And if you can show that your asset has no issuer to control the future, control the supply, control the trading, and Bitcoin is the gold standard of that, then you would be designated a commodity and you would get commodities treatment. And then since there's no issuer that's civilly and criminally liable for fraud because there's no issuer. And I think that simple taxonomy, tokens, securities, currencies, and commodities, that would maximize the size of the digital economy. And to be clear, nobody is close to actually defining that I have seen. I have not seen that digital assets regulation anywhere in the world. And I'm not sure we'll get there with the market structure bill in the US. I think we'll get a fraction of that. But that is the ideal digital assets framework if I was writing the law.
Michael, you said in the past that governments will eventually be forced to buy Bitcoin. But history shows governments don't just accumulate, they also dump strategically, such as we saw in Germany. If a major country openly buys Bitcoin as a reserve asset, what stops it from later crashing the market intentionally, or like for a geopolitical or a balance sheet reason?
Bitcoin is the most useful thing in the world, and anybody that buys it has the right to sell it. And it's even more useful than that because you can buy it with 20x leverage and you can sell it with 20x leverage. So if you have $100 million of Bitcoin, of an asset, stablecoin, you can sell $5 billion of Bitcoin tonight at midnight, 50x leverage. And there's nothing to stop anybody from doing it. Nation states might do it, individuals do it, random people and crypto exchanges do it. It happened Saturday night. It's the reason that this is the most volatile capital asset in the world. But what I say is the reason it's the most volatile in the world, it's the most useful in the world. So if a nation state were to buy Bitcoin, the price of Bitcoin would go to $1 million a coin, and they would make trillions of dollars, and they would be the richest country in the region. And then if someone else took over the country and went insane, they would sell it and the price of Bitcoin would go from $1 million a coin to 500,000 a coin. And then the tourists would say, Bitcoin is dead. Bitcoin is not going to work. We have to sell our Bitcoin. And the rest of us would just grit our teeth and we would buy it at 500,000 a coin because we know it's going to go to 2 million a coin. And another nation would come in and say, well, that nation was stupid, but we're not stupid. And we're going to buy it at 500,000 a coin. And then they'd write it to 2 million a coin. And then there would be a coup, and there would be an election, and someone else would take over and say, my predecessor was a big Bitcoin believer, but they're stupid, and I want to buy gold, or I want to buy land, and they would dump the Bitcoin and would trade down to 1.25 million a coin. And people would say, see, Bitcoin is dead. And Bitcoin would not be dead, and we'd be buying it at 1.25 million a coin. And the point is, yes, someone's going to crash it, but they're not going to crash it until they drove it up by a factor of 3. And the reason that they're going to do it is because it's crashable. And the reason that everybody with money in the world is trading Bitcoin is because if you understand what you're doing, you can make a fortune. And there's some dude in Singapore with a Bloomberg who's going to be trading on Saturday night because someone dumped it when they thought that there was a missile strike, and then they buy it again when there's not a missile strike. And the price is going to do this, and if you're actually sitting at your computer, you're going to make insane amount of money in 5 minutes. And I think that, as we say, volatility is vitality. You should embrace them when they arrive. You can't tell people how to treat their money, and they're going to do things that you don't like, that you think are stupid. But the most important thing is they do it with your network, with your asset. It's like, as long as they buy Bitcoin and they sell Bitcoin, I don't care, just spell Bitcoin BTC. Don't sell it, don't spell it BCH or something, right? Spell it right.
I think if people were lined up to ask you a question right now, I definitely know the question that everyone would ask. We see you on social media putting the green and yellow dots on the price chart of Bitcoin. You spoke about the long-term aspect right now for Bitcoin, and if governments come in and what happens to institutional-wise and the bridge between UAE and the US. Are we entering a bear market or a bull market in the next 6 months?
I think we're entering a bull market. I think that the price is consolidating around these levels. I think that the number one reason that Bitcoin is volatile, or it doesn't just go up and to the right, is a lot of newcomers are ignorant and they're just learning about it, and in the first year they don't fully appreciate it. I didn't fully appreciate it when I first heard about it. It takes a while. So we attract a lot of traders, and we attract a lot of skeptics want to short it, the traders want to trade it. Then you attract some investors that want to buy it at the low and sell it at the high, and so you've got that. And then you've got $2 trillion of holders who are unable to get a loan against it. And so if you had $2 trillion of an asset and you couldn't borrow against it, when you want to get liquidity, you have to sell it. So I think the thing that's going to change that dynamic is the formation of credit networks on top of Bitcoin. And there are two big credit networks that are forming. The bank credit network, JP Morgan, Bank of America, Wells Fargo, BNY Mellon, PNC Bank, Charles Schwab, Citi. All of these banks are starting to extend credit, loans against Bitcoin. And you can imagine when they extend $18 billion of credit, that's equal to all the Bitcoin available for sale in the year. So each $18 billion of credit is one turn on the network. And then you have public credit networks. My company is selling digital credit, and we've sold $8 billion of credit in about 10 months. So as we sell credit, we're actually taking that money and buying Bitcoin. And so the banks offering credit and our company offering credit and the other Bitcoin treasury companies like Metaplanet and Strive offering credit, those are actually creating demand for Bitcoin. They're putting a floor on how low it can go. Like we're the buyers. We're buying right now. And we're buying more Bitcoin than the miners are mining right now, right? And the banks are going to buy more, and the institutions are going to buy more. So there's a floor coming from the corporate credit networks, and then the banks are going to remove the need for people to sell their Bitcoin. If I have a lot of money, I can just borrow a bit and buy my yacht or buy my house or put my kids through college. I don't have to sell it. You should think of it like real estate. If I couldn't get a loan for real estate in the city, the value of the real estate would be lower. And when you start offering loans, the value goes up. And as the mortgage rate goes down, the value of the real estate shoots through the roof. So the formation of traditional credit is going to drive that cycle, and it's going to damp the traditional four-year cycles.
We even spoke briefly about how the UK back in the days used to accumulate all of the gold that was there in their market, and the US followed the same things, and that's how we have central banks today. Today you're the central bank, as you said, for digital assets and Bitcoin. What's one advice do you have for the crowd here and regulators and institutions?
I think that for 300 years, the world ran on gold-backed credit. Nation-state currencies, sovereign debt, corporate debt, retail debt, consumer debt was all a variation, mortgage debt, all a variation of gold-backed credit. In 1971, we went off the gold standard and it created chaos. And you know that in this region more so than anybody. And now we have digital gold, and the world just realized that Bitcoin is digital gold this year. And the logical thing that follows is digital gold-backed credit, digital credit. And there are $300 trillion of credit in the credit markets. It pays 50 basis points, 100 basis points. The most risky credit in the world pays 500, 600 basis points. Digital credit can pay double with investment grade risk. So if I was a regulator, what I would say is, if you want to have the best bank in the world, if your bank is able to offer digital money market accounts backed by digital credit, you will pay 8%, whereas the rest of the world is offering 4 or 2 or 1 or 0. All the money in the world will flow into your nation. If you want this region to be the digital banking capital of the world, it's very simple. Build a set of digital money funds and digital accounts based on digital credit backed by digital capital. Offer the Japanese 8% yield in yen. Offer the Europeans 8% interest in euros. Offer everybody else 8% interest in USD or DRAM. And then hundreds of trillions of dollars will come to you. And then you will invert the entire world monetary order and the banking order. And the technical breakthrough is use digital assets. And the regulatory breakthrough is embrace digital assets. Let the bank create digital accounts. Let them innovate, and then all the money in the world will come to you.
Thank you, Michael. I think this conversation wasn't just about Bitcoin, it's the future architecture of global prosperity. And I believe both the UAE and the US have a historic opportunity. Thank you, everyone.
Thank you.